Bitcoin continues to struggle as it falls below 100,000. That's amid a sweep of risk aversion across markets. Crypto market remaining under strain with some $19 billion in liquidations in turn erasing over $1 trillion from the total market cap of all cryptocurrencies. That is according to data from CoinGecko. And for more on the themes that we are seeing in crypto markets, let's welcome in Ava Labs President John Wu. So John, let's talk a little bit just about the setup right now that you're seeing across the market broadly. And we had a discussion here yesterday on Yahoo Finance. Someone was like, hey, it's only been like 5 Fridays from today that we saw that massive dislocation on that October 10th date. We still haven't really, it seems, healed ourselves in the broader crypto space since then. Does it feel that way to you guys?
It's still in the process of healing from the asset class perspective, no doubt. I think what people sure there was a flush, so to speak, on October 10th. But reality is, over the last 6 months, maybe even a year or so, there's just been so many new instruments where people can access the crypto asset class, whether it is ETFs, whether it's these digital asset treasury companies, or even IPOs like Circle, Figure, or Gemini. All of these new securities, it's just a lot of supply into the market. Plus, there's a lot more tokens as well, and there's just not enough demand to absorb all that. And the irony here is all happening when real-world use and adoption is happening, from the JP Morgans to the BlackRocks to basically almost any industry you talk about. There's like brands using the blockchain technology to streamline their processes. So it's ironic, just as adoption's happening, the asset class is struggling a bit.
Yeah, let's talk a little bit about what's happening specifically with altcoins. I think on this program, we basically just look at Bitcoin, which we're going to talk about in just a second, maybe a little bit of Ether here and there, but it's mostly Bitcoin as gold, et cetera. In those smaller crypto markets, the layer one protocols, as you and the experts will talk about, and even smaller than that. What has that price action been like, and what's the feedback there between the price action in the token and then how much activity is happening on chain, and just where is that space right now for our audience as you guys see it?
Well, I can speak for Ava Labs, Avalanche. Avalanche is a layer one protocol, and Ava Labs, the team behind Avalanche, has always had the mission of creating real-world use cases. And the activity and partners that we're working with to create those use cases is absolutely going higher, while the coin obviously is not doing great. So there's a big disconnect. I can't tell you why that is, but except for the fact on a meta level, there's just too many options now of new tokens, new DATs, new ETFs, for the whole space, and new public companies as well. But I can tell you from my day-to-day, my conversations with brands, with TradFi, meaning Wall Street, they only increase, and the activity we're doing with them is also increasing.
So speaking of that adoption and where it sits within the financial stack, we talked to Michael Saylor yesterday. He expressed his view on where he thinks Bitcoin is going. Let's take a listen.
We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
So John, you mentioned that institutions now are viewing Bitcoin in that kind of context as a portfolio diversifier. Again, thinking down the crypto stack, whether it's with Avalanche or kind of your competitors in there, how does that change, if at all, or like what does that say to you in terms of how you guys approach your business, your development, with that kind of push for, again, an institutional asset like Bitcoin at that level coming?
That's right. I mean, I think everything is different underneath the hood. Bitcoin, as Michael Saylor is saying, it's really the digital gold or store of value. Everything else, whether it's a stable coin, which is a medium of exchange using for payments, or, technologies that things are being built on. For instance, on Avalanche, we've helped the state of Wyoming build their own basically stable coin. We've helped New Jersey tokenize and track land and houses, registry of titles on the Avalanche blockchain. Those are things that are being done that are pushing the technology and the use cases forward. So each one of these altcoins, as you call it, has to be looked at on its own for its own use case or its own product market fit.
So do you think of Avalanche as an altcoin, I guess? That's the way I think about it. Anything that's not Bitcoin is an altcoin. What do you guys
identified it as, so I'm going with it.
Yeah.
I think it's a great one. But there's, the reality is I think there's just too many altcoins right now. And in the end, it's really going to be a handful, maybe 20, 25 of these that are really useful. Avalanche probably, is going to be one of them. And there's probably too many of these meme coins and things out there that actually don't serve any purpose.
All right, we'll work on the branding to get altcoin more distinctive from the meme coins. I think, I hear you. They kind of get lumped together, but there's a difference between something that's got nothing going on and then a protocol you're actually building on. So we'll pick it up next time. John Wu from Ava Labs, thanks so much for the time.
Thank you.
So let's dig more into crypto specifically. So Bitcoin trading below 100,000 today. You can see just over 96,000 a coin. It is officially in a bear market because it has fallen 20% from its last all-time high in early October. Let's bring in Ines Ferré here because, of course, she's been watching, not just over the past several days, but all this year, for the past several years. Ines, do we know what is really driving this recent bout of selling?
Well, we know what's not driving a rally in crypto right now, and that's very important because on October 10th, you had that liquidation event, which spooked investors, but you've also had long-term holders, whales, that have been selling at the highs, and they like to buy at the lows, and they're not stepping in. You have ETF outflows. In fact, yesterday, you saw the biggest daily outflows of ETFs since their inception. So what you're not seeing are marginal buyers, and that's one of the points that 10x Research has made, that with no new marginal buyers, you will continue to see this range bound and weakness. And what they're watching for is the $93,000 level, because what they're saying is that below that, you are going to hit an air pocket. So unless you have catalysts that would send crypto higher, there doesn't appear to be. Even Sean Farrell of Fundstrat, who is a major bull when it comes to Bitcoin and crypto in general, he has turned in more cautious tone over the last couple of days, because what he's saying is that, okay, the liquidity that we're expecting from the government to reopen, that liquidity won't be felt for another month or two. The government shutdown was longer than what they had, what anybody really had anticipated. So that tailwind is, the timing of these tailwinds matters. And then you have the question of the Fed, which is saying it's a coin flip. It's a toss-up of whether the Fed is going to cut or not. And you need the Fed to cut in order to be able to support these asset prices going higher. And that's what strategists across the board are saying, is that now the odds around 50-50 if they cut or not, that doesn't bode well for crypto in the near term.
I mean, it's so interesting, Ines, because there's this whole debate ongoing about whether crypto and Bitcoin specifically is a risk asset, right? But it feels like it's a risk asset. It feels like it's sort of correlated with what goes on with the NASDAQ. It feels like when there's a risk off, you talked about it yesterday, that crypto definitely bears a lot of the brunt of that.
100%. And strategists talk a lot about when crypto does well, when Bitcoin does well, it also is constructive for equities because it tends to front run. And so you have strategists that have been talking on that end, but now you're looking at equities that are not doing well. So this doesn't bode well for crypto across the board. The other point is also when you're looking at fund managers that have these ETF holdings and the underlying asset is going down, they're going to get tapped and say, hey, you better trim some of those positions. So this Christmas rally that investors at bulls have been expecting, it may not come through if the Fed doesn't become more dovish pretty soon. But Julie, I know that you spoke to Michael Saylor, the ultimate bull, talk about bulls, when it comes to Bitcoin. I'm curious as to your takeaways, because at the time you were talking to him, you saw Bitcoin around 100,000 and even dipping below that.
Yeah, and it kept going lower, obviously, after that. And there was actually a story circulating this morning that Strategy may have cut its Bitcoin holdings. Now, Saylor was out publicly saying, no, that's not the case. We may have moved some of our Bitcoin from one wallet into another. And he said, as usual, on Mondays is when they come out with their Bitcoin buying plans. He said, expect to see that we will have added Bitcoin. But what's also interesting to me is Strategy, with the stock falling pretty sharply this year, especially in contrast with Bitcoin and compressing the premium that it was trading at to Bitcoin itself, that they're now offering like more of a menu, if you will. I want to play what he told me yesterday, what he told me and Brian Sozzi yesterday about Strategy's strategy in this respect.
If you want max performance, you're going to take max volatility. Strategy's up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years, no counterparty risk.
So like he's kind of saying Strategy stock is not for everyone, right? He says some people might want to buy Bitcoin itself. And then they've got this new, what they're calling a digital asset credit, Ines, called Stretch, which pays a yield of 10.5%. And is sort of a yielding instrument aimed at smoothing out the volatility in Bitcoin. So he's sort of taking a little bit of a slightly more nuanced take.
Yeah, these are they're more and more sophisticated products, you know, as they continue on this full-on Bitcoin road. These products that if you are a Bitcoin bull and you want to play it in different ways, you will play it in different ways. But look, I mean, to your point of Strategy, year to date, the stock is down 33%. If you played Bitcoin, you'd be better off, although we'll have to see where Bitcoin ends this year.
It is very unpredictable, Ines. Thanks so much. Appreciate it.